planning to buy a property? Welcome to tip number 7. Here is how the financing works. So you have found your property and you have made an offer and you have negotiated the price and now you need financing. Well, today I will give you all the insights into the different mortgages in Switzerland. So let's start, but before applying for a mortgage, there are some requirements that you need to fulfill. First, you need to know if you're eligible to buy a property in Switzerland and therefore get a mortgage in Switzerland. First, you will have to be either a Swiss citizen, an European Union or EFTA national. As non-EU citizen, you will have to have a C residence permit. As EU EFTA national, you can have a B permit, but you can only buy the property for a primary place of residence. Or alternatively, as non-EU national, you can buy a property in Switzerland and obtain mortgage through an investor visa. To know more about the investor visa, please contact us. We will put you in touch with one of our partners. So with that, the second requirement is what we discussed in the previous weeks, where we were discussing the capital requirements, remember? So in Switzerland you need at least 20% own capital to buy a property, and the mortgage repayments must not exceed 33% of your total net income. If you need more information about the capital requirement, please go back and see our tip 2 video on the YouTube channel. So let's say you are eligible to buy a property and get financing in Switzerland because you fulfill the requirements I just mentioned. At the moment, Swiss banks offer different types of mortgages. So you have the opportunity to have a fixed rate mortgage, meaning that the interest rate remains the same for the duration of the mortgage. So you will pay back a fixed regular amount over the fixed term. The advantage of this mortgage is that you are not affected by interest rate changes as it is the moment nowadays or this year, which makes financial planning easier. One of the main disadvantages is that you don't benefit of interest rates suddenly dropping. And another disadvantage is that they are typically more costly to set up. Therefore, when you get the offer of the fixed rate mortgage, you will probably get higher rates than other types of mortgages. The good thing here in the fixed rates, you can set different durations. In Switzerland, very common people use the 10-year duration, but you can go to a maximum of around 15 to 20 years. Currently, for your information, the fixed interest rate for a 10-year mortgage runs between 2.3% to 2.7%. So the second mortgage type would be the variable mortgage. This mortgage, as their name implies, have continually adjusted interest rates. This means that your monthly payments can rise or fall depending on the interest rate movement. The benefit of this mortgage is that you will usually benefit from a lower interest rate initially than you would on a fixed rate mortgage. You also normally have the flexibility to switch to another type of mortgage later on. This means that if you would have the disadvantage that for some reason the payments are fluctuating and the interest suddenly increase, you can change to a fixed mortgage rate. Very good. So now let's jump into the third mortgage. So the mortgage type. So we have the LIBOR or SARON mortgages. Many countries offer the London Interbank offered rate called LIBOR mortgage. And this is similar to a variable rate mortgage that we just discussed. The main difference being that the interest changes at the end of the agreed rollover terms. So the LIBOR mortgage are typically short duration. Often they last up to 5 years, and the rollover periods that you can fix are typically 3, 6 or 12 months. In Switzerland, we have the Swiss mortgage lenders which phase out of the LIBOR mortgages back in 2021. I think it was end of 2021. And they introduced the Swiss average rate overnight, which is called SARON. And this operates very similarly to the LIBOR mortgages with changing interest rates and rollover periods, The main difference is that they use the Swiss money market rather than global London-based banks. Currently, the SARON rate for 1 to 3 years runs at 1.29%. Great. Now we have the fourth type of loans. They're called bridging loans. So some Swiss lenders, they offer bridging loans, which are short-term loans that can cover financial gaps. If you want to buy a new Swiss home before you have sold your current one, they provide these bridge loans, which help you to get the new house until you sell your current one. This can be useful when you're struggling to sell your actual property, and you can typically borrow up to 75% of the value of the property you are buying, and you will usually have to show evidence of how you will repay the loan if the sale of your old home doesn't go through. Great. Now, the fifth type of mortgage, they're called offset mortgages. So some Swiss lenders also offer offset mortgages. This allows you to combine the standard mortgage with the funds from another account with the same bank. So for example, you could combine the savings account or the Swiss pension account to your mortgage account, and these funds can be used to offset interest owed on the mortgage, enabling you to pay off the mortgage more quickly. Great, so we have seen 5 types of mortgages. Do you remember which ones? The fixed mortgage, the variable mortgage, LIBOR and SARON, the bridge, and the offset. Very good. So what are the mortgage forecasts for today? Do we know what's going to happen with the interests? Look, the benchmark interest rates for 10-year fixed rate mortgages have risen sharply since the beginning of the year. And the interest rates are expected to rise moderately during this summer as well. There are a number of factors explaining this trend. So we have the cessation of the securities purchases by the central banks and the subsequent sale of bonds. We also have the Fed announcements that you have heard, indicating the end to bond purchases and up to 4 rate hikes in 2022. And we also have the uncertainty about the war in Ukraine and the associated increase in commodity prices, the global supply chain problems, and the fears of inflation since the beginning of the year. But the good news is that after the summer, the long-term interest rates are expected to stabilize at the current level. And the SNB, the Swiss National Bank, they forecast that they expect an inflation rate to fall below 1% in the second half of the year, which will stabilize the interest rates. I hope you liked our 7th tip. If you did, please give us a thumbs up and subscribe to our channel. See you soon for our 8th tip for buying a property. Bye!